Hey, what's up, everybody? This is Tim Hart, branch manager of Van Dyke Mortgage right here in Fort Myers, Florida. Hope all's well. Want to come to you with some information about reserves, debt to income ratio, and why it's going to be important for your FHA buyers. A lot of changes happening out there, a lot of content coming out for you guys about that, all the different changes that are happening. All right. One of them, probably one of the major ones for your business and the real estate business, is the FHA changes. All these credit score increases you're seeing across the board. Different lenders have different increases. You've seen that already. Some are going to a 680, 660, 640. Some can go below that, and they have different overlays. And so I want to just touch on some of that real quick. First things first, FHA itself has not increased their credit score. Okay, so this is not an FHA driven thing. This is a market driven thing, and it seems to be a perceived risk, meaning with the coronavirus, that the way a lot of lenders are looking at these loans now is lower credit scores, lower chance you're going to pay back the mortgage, or worse chance, I should say, and therefore they're pricing them accordingly, or they're not doing them at all. All right, whether you think that's right or wrong, it's the way it is. And that's what's happening in the FHA world right now. But loans are still getting closed. Buyers are still trying to get it pre-approved. You're going to have to know what's going on. So a lot of the FHA buyers, what you're going to find out is across the board with a lot of lenders is they're going to get charged discount points. Okay, so that's going to be where I want to start this conversation, discount points. Okay, 1% of the loan amount, right? Discount point. That's one discount point. Loan amount's $100,000. Getting charged one discount point, it's $1,000. This is a cost that's passed on to the borrower to get the rate to close the loan. All right. A lot of this is going to cause your buyers, or your sellers, I'm sorry, to have to do seller concessions. So that's part one of this. The other part of this is I want to talk about. So back to that though, real quick, on the discount points, you've got to remember that it's going to get more costly, okay? Especially if their loan or their credit score is below a 640. Ooh, they're getting charged a lot of discount points, 2, 3, 4 points to get their rate, okay? The seller's going to have to contribute. That's part one. The other part of this is when you get down below a 640 credit score. For us, for example, 640 credit score, you have to have a certain amount of reserves. And that's what I want to talk to you about. You're going to be hearing that a lot of different lenders. Do they have reserves? Okay. Reserves are considered the break in case of emergency type of situation. After the borrower closes on their loan, they brought all their cash to closing. What do they have left over? And when they say reserves, all they're talking about is PITI payment, principal, interest, taxes, and insurances. They want to see them have 1 month of reserves. They're going to consider reserves 1 month payment. Okay. Payment's $1,000. They're going to see $1,000 left over in the bank. That's in case something happens. They can use that money to pay their mortgage. All right. We need to have 2 months reserves. That's 2 monthly payments, $2,000. Okay. You're going to see some places say we got to have 6 months reserve, right? $6,000 left in the bank after closing. Those reserves more than likely will not be able to be a gift. Okay. They're going to have that money. So it won't be able to be a gift. The down payment can be, but not the reserves. All right. So that's one part I want to let you guys know about. The other one is debt to income ratio, DTI, debt to income ratio, DTI. DTI stands for debt to income ratio. Don't ever say DTI to your borrowers. Their, eyes will go to the back of their head. They won't know what they're talking about. Debt to income ratio is how much money you make every month divided into how much you spend every month on your mortgage payment plus consumer credit debt like car loans, credit cards, student loans, etc. There's going to be limitations on this, all right? Limitations on the debt to income ratio for FHA loans, depending on the credit score and stuff. They'll go to 42% with this credit score and 45 here, or not above 50 here. You're just going to have to be aware of this stuff and have the conversations with your lender, okay? That's what I'm going to recommend to you the most. Have an open conversation with your lender. Do we need seller concessions? Do they have the reserves? and is there DTI in line with your product? You, the realtor, do not get into pre-qualifying people. Okay, don't get into telling someone, no, you probably won't work. No, your DTI is too high. Like, don't get into that. Okay, let your lender do it. Refer them to us or whoever your preferred lender is, and let them say, hey, you fit into this, this, and this. Let's do it. Or you don't fit here. This is why you need to do X, Y, and Z to get there. All right. Don't try to become a lender. It's hard enough doing your job as it is. So refer them over to us. Let us have that conversation with them. But I wanted to make sure I dropped a little education on you guys for reserves, seller concessions, and the DTI, and kind of help y'all guide you through these crazy times. I mean, it really is. It's nuts out there, and hopefully it ends soon. It will end sometime, right? Keep being a leader out there. Keep staying in front of your database and your sphere of influence, and you'll come out of this a stronger realtor. All right. If I can ever help you out, let me know. 239-910-5668. Connect on social media, Instagram, Twitter, LinkedIn, all that stuff. All right. I'm always here to help. Nights, weekends, shoot me a text, call. Let me know how I can help you and your clients. Take care, everyone. Stay safe. Hope everyone has a great day. See you later.